Hello, I'm Emilie Bellet, founder of Vestpod and author of You're Not Broke, You're Pre-Rich, and you're listening to The Wallet. Every week we bring you the best tips, guidance, and a good dose of inspiration and motivation to help you manage your money better. Welcome to today's episode. We are talking about why money news so often makes people feel anxious, reactive, or overwhelmed, and how to engage with financial information without letting it drive panic or poor decisions. Whether you follow markets closely, catch headlines on social media, or feel confused by investing coverage altogether, this episode is about what actually matters, what gets distorted, and how to think more clearly about the stories you see. I'm joined by Kalpana Fitzpatrick, digital editor at MoneyWeek. She explained how financial news is chosen, where confusion comes from, how click-driven content shapes emotions like fear and urgency, and how to tell the difference between useful information, noise, and outright manipulation. So it's amazing to have you in the studio today. Kalpana, we're going to talk about your role as digital editor of MoneyWeek. And I'd like to start the conversation. You spend your days analyzing financial stories, writing about financial news. Can you tell me why people can find it overwhelming?
Well, there's so much to write about each day. I have a lovely team that I work with, and between us, we have a lot to cover. Why is it overwhelming? First, there's so much going on. It can be sometimes a bit scary for some people when they see headlines, especially when they start making the front pages, etc. Now, why is it overwhelming? Because there is just so much of it. But nowadays, we're not just relying on news by picking up a newspaper or going to a website that we're very well known with. It's social media. It's everywhere. There's just so much information. And, as soon as you express an interest in anything, it's on your Instagram or TikTok, YouTube, podcasts as well. There's a lot of information. So for people, and when they're reading all this stuff or listening to it, it can become quite overwhelming. That's the bottom line. There's just so many resources. But I will add to that, the important thing is to not bury your head in the sand and actually read the news when it comes to money, because they can have an impact on your finances. And it's always good to be able to prepare when you can. So it may feel overwhelming, but it's important to be able to filter out the things that you need to be reading or listening to and using trusted sources.
Thanks, Kalpana. That's so interesting. And actually, especially when we talk to the younger generation, I feel people get a lot of their information from social media. They want short form content, and you're writing long form. So how do we get people to read more about finance, for example, which is probably not for most people the most exciting topic? How do we get them to read like long form content, if you think that's helpful for financial decisions?
It can be really educational. I think if you read about something or see some short form content, so we do tend to do a bit of mix. There's some features that we write, some are it's basically news as well. If you see something and it sparked an interest or you haven't quite understood it, so for example, like you might be talking about investing and is talking about capital gains tax, but you're not sure how capital gains tax, you might go and find an explainer and read exactly how it works, because it can impact your overall income from your investments. So I think it's a matter of how much do you want to educate yourselves? And if you really want to learn more, now it kind of swings back to a conversation that you and I have had over the past few years about we haven't had financial education in school. We didn't leave school knowing everything that we need to know about money and make the right decisions to help build wealth. So now the media, and I'm not just saying this because I'm a journalist, but the media, influencers, etc., many of them are doing a great job in educating people when it comes to money. But I think as an individual, you also need to sometimes step up and think, actually, really need to know more about this. I want to understand how it works. So actually reading features and stuff can be so educational and interesting as well. I'd say if you have, just pick up something like MoneyWeek and read one of the features, they can be so interesting. Even if you don't understand it all, knowledge is power, is what I say.
Yeah, and I think what's interesting is we think as finance as this big, black box, but actually There are different things. What we tend to do at Vestpod and in the wallet is educate around basics of personal finance, it's budgeting, it's investing. But what you cover in MoneyWeek is going beyond that, is the economy, how companies work, how companies make money, how you can buy stocks in certain companies. So I think it's also really interesting from a personal point of view to understand how, how companies work, how the economy actually works.
Absolutely. We've even written about things like space exploration
Yeah.
because, you can have an investment trust that does invest in companies that are looking at space exploration. So, and I just find them quite interesting. Like healthcare is another one. You can invest in healthcare, but just understanding the companies behind it, the ones that you want to take opportunities and take advantage of those opportunities from. So, yeah, absolutely. I find it interesting to write about, but also interesting to read when a colleague has written something. And especially when it comes to investing, now I always say when it comes to investing and picking stocks, there's two ways it can go. You can follow a herd, like just follow what your mates are saying, follow what you've seen somewhere else. But I wouldn't say that's always the right strategy because the power is with the consumer. As a consumer, you know which companies you will want to support. You've read about them, you understand what they do because there is this old saying, don't invest in anything you do not understand. So if you are going to buy healthcare stocks or a healthcare fund, for example, you really want to understand the companies that are in those holdings, etc., in the top 10 holdings of a fund, for example. So I'd say consider it research as well, not just understanding, but reading anything like long form or feature can also be research if you are thinking about buying into a fund, for example, for your investments. So, yeah. And I'll just go back to the fact that as a consumer, you have the power to make the right decisions, but you can't make the right decisions if you haven't done a little bit of research around it. So it's definitely worth sort of like digging into things that really interest you.
Yeah, and reading a bit more about these stocks rather than just looking at a short, like 30 seconds video about,
Yeah.
buy this or that.
Yeah, and this is the thing about social media when we were saying earlier, but there's so much information out there. What can you trust and what can you not trust?
Yes.
I wouldn't say you can trust everything that you see on social media, and it can be a bit worrying if you get pushed into like a few years ago. In fact, we were talking about meme stocks, and that's one easy way to actually lose money because you follow a herd and all of a sudden the stock crashes and you've lost money and then you don't want to invest. So yeah, absolutely. It's probably a better way to do it is just do your own research.
And do you think there are specific investment topics that are exaggerated, misrepresented in the news?
Or I will say one of the things that really comes to mind is crypto. Now, I hear so many people tell me all the time, oh, I invest, but I have crypto. And I still find that quite worrying because it's something that if you haven't understood properly and you're just following something that you've seen on social media and you haven't looked at your ISA, etc., then you are probably going to or could lose money, should I say. So being able to do things properly. Another thing is there's been a lot of talk about investing lately. There's still a lot of myths around investing. And I think that doesn't necessarily come from media outlets. I think it actually comes from conversations
Hmm.
that people have with family members or friends. I still hear it like I wouldn't invest. I don't know what I'm doing. It's gambling. And I find that really like that terminology is off putting. So I think, and actually, I've seen it in other media outlets as well. I just sometimes, not all journalists might understand something and it can be misrepresented. And that's where I go back to respected sources, know what you're reading and who the people behind it are. Are they getting the information right for you to take action from? Another thing that we have been writing a lot about is AI, artificial intelligence. Now, that I will say is yes, there are opportunities, and you may read about bubbles and you think, should I invest in companies that are AI related? The only thing I will say though is what I see is actually people using, not necessarily looking at AI as an investment opportunity, but they're using it on their phones to get financial advice. And that's not what we're telling people. We're telling people actually, this is what's happening in industry. And, just keeping an eye on like where the opportunities are. Is there a bubble? Yes or no? What companies are doing strong? How is that industry moving on, etc. But what I see people like, yeah, well, I know everything about AI, but what they're saying is they use ChatGPT and get financial advice. That is dangerous because research has shown that 60% of stuff that comes through AI could be wrong.
Mm-hmm.
So I would say to someone, don't go to something like AI and get investment advice. That's not what we're telling people.
How would you start researching? So let's say you're interested in, I mean, you gave me some examples, AI, maybe healthcare. How would you start researching about these industries before, picking stocks? Because I guess there's a general understanding, then you can go and start looking at funds, and then eventually, if you want to take more risk, you could look at stocks.
Yeah, so if I just like reel back a bit, one thing I would say is if you are someone who's just starting out in investing, probably not a good idea to pick individual stocks in the first place. Because yes, that does take time, research, and skills, and a lot of traders do that on a day-to-day basis as part of their job. But you can pick themes. So if you're, for example, interested in tech, you might pick a fund that invests in several tech companies. If you're interested in healthcare, you might invest in a fund that has several exposure to several healthcare companies. You could be interested in a specific region. One of the things that I feel like is picking up in 2026 is emerging markets, for example. So you may pick a fund that has exposure to various emerging markets. So before you do that, what you want to say to yourself, is this a real opportunity for me or not? And that's where you might pick up something like MoneyWeek or, the magazine, or go online and read about it. Our journalists are always sort of picking up on trends. We're talking to experts. And that's quite important as well, that we don't just like come up with these ideas. We read a lot of reports, we see a lot of data, and we speak to a lot of experts and write based on what we hear and what people are telling us. So, and that's people within the industry. So we are bringing those experts to you. And that's really key because that's research, that's journalism, and that really helps people make informed decisions.
What we see, and I think we've all been prone to that, but it's like this clickbait. How does that make people feel? Because I guess if you're a journalist, if you're someone producing content, if you're, we're editing the wallet, we want to have the
Yeah.
best title. We want people to click on it. We want people to read it. We want people to follow it. How do you feel about that?
So clickbait, I would just say, if you read something and the headline is really like fear-mongering or making you feel like you're going to miss out, it's clickbait, because
So a
it's like,
sense of urgency.
yeah, and I personally don't trust those sort of headlines, and we don't write them. I don't think we see that from financial journalists. We don't do clickbait. Our job is to inform people, help them make decisions, tell them about what's going on in the news, etc. That will impact their finances. Anything from interest rates or what happened in the budget, that's another area that's obviously kept us quite busy. So, but if you're seeing something which is headlines, don't miss this opportunity, or it doesn't quite tell you and the article doesn't deliver what it says. I don't think Google likes that, and I don't think readers like that. So I'm hoping that anyone listening to this isn't actually clicking on those links in the first place.
Where do you see the biggest sources of confusion for everyday retail investors like you and me right now?
I think the confusion comes from, so I saw some research recently about where people go for financial advice. A lot of them go to family members, and that is sometimes misinformation. Some people go to TikTok. That can be misinformation because you do need to check the credibility of your sources. And also just going back to the fact that you said earlier, there's so much information out there. It's hard to know what's real, what's not, what to trust. And also just the fact that headlines can be exaggerated in papers sometimes, and they can feel like scaremongering. So it's being able to look behind those headlines and see, actually, have I understood this correctly? And how does it impact me? And I think it all comes down to the fact that, yeah, there is just so much information out there at the moment. So being able to pick the credible sources is really, really important.
So if I'm reading the financial news, I pick up MoneyWeek, and you don't need to read everything in one go, or you can just pick and choose the articles you're interested in. How can I stay informed without letting this financial coverage really drive anxiety or making me react and maybe change my portfolio or change my investment?
So first thing I'd say, when it comes to, if you're investing, you shouldn't really be changing your portfolio all the time anyway. You and I both know, like, investing is a long-term game. You invest, you hold, see how it goes. Ups and downs are pretty normal in the market. So don't lose your nerve. Don't let the news create knee-jerk reactions when it comes to investments. I will say it's about staying informed, staying on top of things. And it isn't always about investment news. It could be something like in the autumn budget, for example, Rachel Reeves said that she was going to cut the cash ISA allowance under 65s to 12,000. So if anyone wants to make use of the 20k allowance, they would have to start investing from the tax year after next. Something like that is quite important to know. So it's not always just about what you do with your portfolio. It's about these changes that could impact how you save. So I would say if you read the news, and I've heard people say to me, I'm just turning off the news because it's all bad and it's just creating anxiety. I don't know what I'm doing anymore. I would say you can sign up to newsletters and things, and that's a really easy way to kind of just get things coming to your inbox. If it feels relevant, read it. If it doesn't, you don't need to read everything. It's impossible to stay on top of everything. If you've got specific subjects that you're interested in, or something that, maybe you're thinking about your pension savings, for example, then you might just pick up some content around pensions and start reading about that. But I'd say one of the easiest ways is to follow the people that you want to follow, like journalists or outlets, etc., on social media. There's so many like social media activity that day to just kind of give people those snippets. So those snippets that we see are actually quite useful, because do you go further with that, or do you, okay, that was interesting, but I don't need to go any further than that. And if it does make you feel anxious, I would just say sometimes just, put the laptop down, have a little think about it. You don't need to get stressed about it. It's the news. The thing is, bad news sells, right? So people do write about bad things. They don't always write about, we write about good and the bad, but it's what sells. And sometimes there is a lot of news, but it isn't always as bad as it seems, I think. And you can talk to people. Another thing we don't do enough of is just talk to each other about money, talk to your friends, talk to your family. Not saying necessarily get financial advice. Don't talk to your friend and say, what are your stock tips? And then go and buy those stocks. That's not what I'm saying. What I'm saying is, if there is something you've read about it, talk to your friend about it. Just say, I read about this the other day. What do you think? And it's just sharing that load, if you see what I mean.
Yeah.
And I think that's a really nice way to reduce anxiety. I think talking fixes a lot of things.
Yeah. And I guess when you're writing MoneyWeek, it's not your goal to make people anxious. It's to reassure people, to inform them, to make them feel good about their long-term investments. I think at Vestpod we have also this challenge, and it's quite interesting. Every week we have to pick a topic for the newsletter. We have to pick a topic for the podcast. How do you choose what you're covering at MoneyWeek and what you're actually leaving out?
Well, we cover so many things. We tend to cover, like, for our newsletters, it's pretty much news driven. So if there's something that's happening, we like to keep our readers informed. So, and sometimes that's the thing that's quite hard to stay on top of for people. It's like there is so much news around. So we pick what we feel is relevant for our readers. And we do know, and one of the key things in any media outlet is to know who your reader is. So we pick the news that we know matters to our readership.
This episode is sponsored by MoneyWeek. MoneyWeek is a weekly financial magazine written by great journalists, and it's one of my favorite ways to stay on top of money news. More than 20,000 people read MoneyWeek every week, in print and on the app. You get investment ideas, market news, economic trends, and practical guidance on things like ISAs, pensions, and savings, all in one concise and jargon-free format. You can try 6 issues for free. Then the Wallet listeners get an exclusive £5 discount on a quarterly subscription. Visit moneyweek.com/wallet and enter the code WALLET. What do you wish readers understood better about how financial journalism actually works?
How do readers understand financial journalism, basically? I wish they'd sometimes understand that we are human. We can only cover so much in a certain space of time. And one of the things that really annoys me is actually when we write something and people don't check the date of the article, and then they write you a letter complaining. Because people do write in to complain about one small error even sometimes, and not about all the great things that you've done, but just checking the date, because actually the article isn't necessarily wrong. It's just written 3 months ago and they didn't see the date. So I wish they'd just kind of, understand that and also just really understand that actually One of the things that I know about every financial journalist that I know, not just MoneyWeek, but all of them, they're all great. They all do such amazing things. And we actually genuinely care. And I think
Yeah.
that really is such an important thing to know, is that a lot of financial journalists that have been doing it for quite some time. We live and breathe it. We don't stop. We don't stop as financial journalists. And we genuinely care about helping people with their finances. So I wish people would actually understand that as well, that when we write something, we mean it. Like we just do it with so much passion. And I think anyone who is in financial journalism doesn't share that passion probably won't stay in there, because it's a job that we do out of passion.
Yeah, definitely. How can you tell the difference, or how can someone tell the difference between what you're talking about, trustworthy information, versus scams, noise, and really make sure they read from relevant sources?
Yeah, I'm actually really glad that you mentioned scams, because that's quite a scary subject at the moment. Well, it's always a scary subject, but when we see scams appearing on social media, pretending to be someone else, and people fall for it. I think I saw one recently where Stephen Bartlett was impersonated on Instagram, and it was an investment
Yeah.
opportunity. I did report it to Instagram, but I also I wrote about it as well, knowing that he has quite a big following and it was investment related. I actually had 2 readers get in touch, and one had said, actually, I have fallen for that scam.
Wow.
And actually, she almost parted with money, and luckily she didn't. But what happened is she shared her number, and she's constantly being harassed by other scammers. So it seems like there's like sometimes a network with these things. So how do you differentiate between a scam and trusted sources? I would say always look at the source first. And one, if they're talking about an investment opportunity and it feels like it's too good to be true, it's a cliche to say it, but it always is. The thing about investing or anything to do with money is people always see it as a way to get rich quick. And I say it so many times, investing isn't about getting rich quick. It's about getting rich slowly. Now, these scams will tell you you're going to get rich overnight, and you cannot miss these opportunities. There's pressure. Do it now. Share your details. Don't share your details. Don't do it now. That's not how it works. So read trusted sources when it comes to making big financial decisions, because otherwise it could go wrong.
You talked about this fear, this urgency. There's also this fear of missing out. How do these emotions get used to influence financial decisions?
It's basically what I was saying, like everyone wants, the ultimate goal is for, let's get rich.
Yeah.
How can we make more money? How can we make it fast? And I think scammers play on that, and not just scammers, but people, sometimes it's just they want you to click on a link because they're making a little bit of money out of it. It's called affiliate links, and that can sometimes be, when it's not a credible source, it can be done in a very pressurized way, because you're made to feel like you've got to do this now because otherwise you're going to miss out on this big opportunity, or this is so great. And I'd be very wary of anyone promoting a financial product and telling you to just do it now because you're going to miss out. So even if it's not a scam, I wouldn't want to feel pressurized into making any investment decision. Now, I'm not talking about open a savings account because this interest rate is going to end next week. I'm not talking about that. I'm talking about sign up to this, get this bonus, and then actually you're locked in something that's costing you a lot more in the long term, in whatever way. Maybe it's fees, I don't know. I would say I'm very much that kind of person, not just when it comes to investing, but also I hate being pressured into doing anything. If you pressure me, even if it comes to buying something, like my children might ask me, and if they pressure me too much, even if I really want to buy it for them, I thought, you've pressured me, so the answer's no, because you've made me feel pressured. But I think that's a really good rule to have when it comes to your money. If you're going to part with big sums of cash, don't do it under pressure. Do it under a background where you've made an informed decision.
So now if we move away from scams, but still talk about the promotion of financial products, because people may not be aware that promoting financial products is actually regulated by the FCA. It's quite strict. you will have ads in MoneyWeeks, for example, about financial products, savings accounts, ISA, investment products. How do you approach that, and what are the main rules, just for the audience to understand what is legit and how do I look at this product?
Yeah, absolutely. I mean, there are businesses out there and they need to make money, and that makes sense. And people do want to know about products. I think if you are looking at a promotion, make sure, and if you are then taking action on that, make sure it's right for you. So, credit cards, for example, is one that I feel sometimes you really need to look at. So, for example, there might be a bonus offer, and or even savings accounts actually, but then that bonus offer goes and it ends up costing you more. So let's say if it's an ISA, they get you in, this is a great interest rate on a cash ISA, let's say, here's a bonus, but then 12 months later you're stuck in a really, really low, below average interest rate, and but you're kind of, you forget about it. That's the thing. And so if you do something like that, take advantage of the bonus, but then 12 months down the line, think about moving that, because that's where they lock you in. So I'd say the main thing is making sure whatever product it is, it's right for you. And it's same with like credit cards. If you might lock yourself into a deal, but then if you're not keeping up with repayments, at some point it's going to cost you a lot. So like say 0% balance transfer cards is, for example, a good one. You buy into it and then you can pay off your debt. But if after that 0% period ends, you haven't managed to pay off your debt and you're still using that credit card, it's going to cost you a lot of money. So yeah, just kind of know exactly what you're getting yourself into. Make sure it works for you. If it's a bonus deal, make sure you review it once that bonus deal ends. So yeah, so it's just, again, it all comes down to making informed decisions.
And one other topic is about financial advice versus financial guidance. So you provide financial guidance, you don't give like specific advice to each one of your readers. How do you approach it? Because that could be sometimes quite a fine line. Just one example I have in mind is you may have in MoneyWeek some, best buys in terms of funds or in terms of stock. And if I'm reading MoneyWeek and I just take this guidance from you, how do I make sure, it's not advice, it's not guidance? If you could explain
Yeah.
that.
Do you know what, earlier you asked me, what do you wish people knew about financial journalists? Well, one thing I will also say about that is we're not financial advisors. We can't give you actual advice. That's something I feel you should always go and see someone about, because everyone's circumstances are different. And that's important to know when it comes to financial advice. Like, I can be in a room and someone will know that I'm a financial journalist, but, look, can you give me some advice? I'll be like, no, I can't give you advice. I'm not even going to recommend anything. So we do write about best buys and top tips, etc. But you have to remember they come from journalists. The onus is on you before you part with your cash to make sure that product is right for you. If you're making an investment decision, the onus is on you to make sure that stock is right for you and you genuinely want it in your portfolio. You understand risk. You understand if that is a risk that you want to take. And again, I don't know your individual situation. I don't know how old you are. I don't know whether you got debt or anything like that. So anything that you read in any media outlet should always be taken as guidance and information, never advice. And anyone that tells you that they're giving you financial advice and they're not a professional financial advisor and they don't know
Yeah.
everything about you, would probably walk away.
Yeah, I think that's really good answer, and I think it's good to remind everyone. And it's the same on the wallet. It's the same on all we do at Vestpod. It's always about guidance. I'd love to talk a little bit about the complexity of financial products and sometimes of investing. For most people, investing seems very complicated. It seems that it's for people who have a lot of money, who are experts, who have been working in finance for a very long time. So this complexity in terms of financial products, is it accidental, or is it benefiting someone?
I don't know if I want to answer that. Well, let's just say, look, I think it is unnecessarily complex. I
Mhm.
feel like we see very complex jargon when it comes to investing, and I think that is changing slowly. And so if I go on a website and I don't understand everything, I'm not going to invest, because I just like, this is just gibberish to me. So it's about breaking down those barriers. Now, I've written about the myths around investing a lot. And Yeah, I feel like people are just not really attracted to it. Traditionally, it has been seen as something that's for city workers, etc. I feel like that's changing. I think that is changing. I'm seeing more people interested in investing. They want to know, they want to learn, and that's a good thing. But what's stopping them is actually just not listening to all the other noise that's, don't do it, it's gambling. Don't do it, you're going to lose all your money. But actually, it's just about understanding it. And it can seem complex, and it's only complex if you're thinking of investing as trading. So if you're going to think, oh, I need to pick 10 stocks, forget that. It's actually can be as easy as opening a bank account, actually, because you can use a robo-advisor. You can put in your risk profile. It's really easy. You go onto these platforms and they'll ask you a series of questions and recommend fund for you. And all you have to do is commit to paying either a lump sum or monthly amount, and then give it time as well. So I think taking those steps is getting easier, but I think there's a lot of people that are still quite nervous and being put off unnecessarily.
Yeah, and I think the regulation is still really heavy on, which is normal on investment products. So
Yeah.
sometimes if you mention robo-advisor, so you decide you want to invest, you start using a robo-advisor, it's a platform that's gonna, put some funds together for you. As soon as you start reading the names of the funds, the acronyms, and start looking at the fund documentation, it's actually quite complex.
Yeah. And I would say, do you know what? The main thing I'll say, if that's how you feel, just get started with investing and don't look at all that stuff. Because the first thing you need to do is overcome opening that account, start seeing it work. And again, also don't panic if you see it going up and down, because that puts people off and then they don't go any further than that. And then you will find, and I say this because, I've done it myself, like as soon as you see it working for you and you think, oh, actually, I want to know more, you're going to start looking at those documents and it won't overwhelm you, it won't scare you off. But if you're doing it at a point where you're still quite nervous of taking your first steps, don't look at them. I kind of feel like it's like when if you're scared of heights and you're walking on like a glass floor, let's say, something I did recently, and
Wow.
but you need to get across. And if you're nervous, don't look down. Just go and get across first, if that makes sense.
Yeah.
I'm kind of thinking of it in a similar way. So when it comes to investing, just take your first steps and start doing it first, and then start looking at all the documents and stuff if you really want to. But I don't really feel like you need to bother yourself with that level of detail if you're still feeling quite anxious, but you want to get started and want to see how it works, because actually these robo platforms make it so easy for you. We were talking about complexity earlier, but these robo platforms break down those barriers, and it is so simple. They make it so simple. There's an element of gamification in there. They're doing it so it's simple for you. Why make it complicated for yourself if you don't need to?
Yeah, and there's a lot of tips and information on this platform.
Yeah.
But I love what you said earlier about when investing in funds, look at the holdings. So when we talk about investing, it's all coming back to the basics. What are you actually investing in? You're investing in companies that form part of the economy, that should be, hopefully growing over time. So instead of looking at the name of the fund, look at, what are the top 10 companies in these funds, and then you'll understand what you're investing in. But you don't need to select these companies. You don't even need to select these funds. You can select something really broad. You can select an index fund that just follows the market.
Yeah, exactly. And actually, I talked about tech funds, for example. So people, when we were talking about AI, and they're like, oh, I want to invest in AI. So they're, oh, actually, I'll go and buy the NVIDIA stock, which everyone else is doing. It's not a stock tip, by the way. And actually, what you could do is buy into a fund that has exposure to NVIDIA, but it has exposure to several other companies, which also adds diversification, and it reduces your risk as well, because you're not relying on that one company. I'm just giving NVIDIA as an example. But again, you don't need to feel that you need to pick one stock in any given sector or region. Funds are brilliant at doing that for you, but it is good to know what's in that. So say, for example, you're like, oh, actually, I want to invest in NVIDIA, and you might not want necessarily buy just a stock on its own, but you can look for a fund where it's within the top 10 holdings, for example.
Yeah. And on the big global funds, you will find this stock on the top
Very likely.
holdings,
Very likely you will.
anyway.
And there's so many other companies making waves that you might find actually you're doing better somewhere else. So yeah, and that's the good thing about funds is that you can have exposure to several companies.
From a journalist's perspective, what does sensible long-term investing really look like beyond the headlines?
Yeah, so I think the main thing is that investing is for the long term. So there is a lot of news going around and it can cause panic. It will cause exciting headlines. We're journalists. We like exciting headlines. We like the big news. But we're not telling you to go and switch your portfolio around. We're just telling you the news. Long term investing is anything 5 years or more. So if you've only had your investment for a few months or 2 years, don't panic. Just sit on it basically because it needs time. So it's about consistency. So I like the idea of drip feeding something every
Yeah.
month because that way you can take advantage of ups and downs in the market and leaving it there, make it part of your long-term savings. But before you invest at all, if you've got debts, you're paying off credit card, for example, do that first. Build a buffer fund, also known as emergency fund. So if that car tire decides to bust, you might want to replace it. You've got a little buffer fund to use because you don't want to dip into your investments. That just needs to sit there and grow for your future.
When someone reads a piece of financial news, how should they decide whether it actually changes anything about their own investments?
So I'm going to give an example. We've spoken a lot on MoneyWeek about gold, for example, how gold can be quite a nice cushioning in your portfolio. So if you're investing and you've got exposure to equities and nothing else, you might want to add a little bit of gold. So, and gold has been doing incredibly well. We might talk about certain markets not doing well, and you might think, oh, actually, I might want to reduce my exposure to that. One of the things that we talk a lot about is the risk that you want to reduce towards retirement and looking at income funds, for example. And that's where you might think, well, actually, I might need to think about this. But it also comes down to having, if you've got a good advisor as well, you can talk to them about changing the profiles on your investment portfolio.
Yeah, so it's really using the news to then question everything, do your
Yeah,
research, and always with this long-term
yeah.
perspective on your investments.
Exactly. And it's also important to remember when we talk about investing, we are talking about pensions as well. One thing that we wrote about recently was default funds in your workplace pension. You're put into a fund. It might be right for you, it might not be, but it's something that you can change, and a lot of people don't know that you can change it. I did that recently myself. I looked at what my funds were in my pension. I was like, actually, you know what? I prefer these, and I've still got plenty of time before I retire. So I kind of just moved it around. But a lot of people don't really know that they can do that. You don't have to necessarily sit in a default fund. But it does come down to sometimes speaking to people or just reading something. I wouldn't say go changing your funds without any kind of advice or knowledge, but it's just something that you can do if you want to. So yeah, so it just depends on like making decisions, talking to the right people, and then doing what's right for you.
And that's a really good point on workplace pension, because most people are actually, I mean, if you have a full-time job, you're very likely contributing to a pension. This money is invested in the stock market. So if you think you're not investing, you're actually already an
Hmm.
investor because you're putting money every month into your pension.
Yeah,
So that's a great place to start actually in terms of investments and looking at how you're invested for the long term.
yeah, absolutely. And I will say, if you've never looked at your pension fund portfolio, that's yours. Go into your account and have a look. Put it on your app, but don't look at it every day because that can make
That's
people
stressful.
nervous. And I've had to sometimes just remove my apps for a while, not looking at them. It's like you say, it is a really good place to kind of just think, well, actually, I'm already doing it. Let me see how that's doing. It's a great way to boost your confidence. And then you might then say, actually, I will open an ISA and start putting a little bit of money into that. It's all about small steps. Take those steps, small steps. Make sure it's the right time for you to do it as well. So like I said, if you've got credit card debt, you probably want to focus on that first. Boost some savings. That's really important steps to take before you invest. And then just little and often and consistency.
And consistency. What would you say are the favorite money stories or investment stories people read about at the moment?
So for us on MoneyWeek, and it's actually not investing, it's actually IHT, inheritance tax. People are really, and tax generally, people are really worried about pensions coming into the IHT circle. So I think that's worrying people. When it comes to investments, I think we're getting a lot of interest in people reading about. At the moment, we've just started 2026, so a lot of people are interested in opportunities that they've not thought about. AI is another one people are interested in, only because last year we did so much talk about AI and a lot of talk about an AI bubble. And I think people really want to know, is there still opportunity in the AI sector? Yes or no? So I think they're looking out for opportunities. We also get a lot of interest in, there's quite a few things here now, gold and precious metals like silver, copper, the commodities. Is there an interest in there? And pensions. I think we can write so much about pensions and it's always going to be interesting pensions. So I think they're like really, really big subjects that clearly people find quite complex, a lot going on. They want to know more. So we write about them. We tell people everything they need to know. And it's informative. And that's what it comes down to, getting information to help you sort of, build wealth and do better with your finances and make the right decisions.
Maybe you've answered that already, but what do you think are going to be the maybe top 3 topics for 2026?
Oh, I think at the moment it's going to be, I think this is going to be a real bumper year for ISAs. And that's because of the impending changes and also investing generally, especially when it comes to beginners. And I say that because obviously the government wants people to invest more. I think people want to invest more. So I think listening to podcasts like this are going to be so valuable for people, where they get to pick up tips and just build their understanding about how investing works. And I think they're going to be quite big subjects for me personally. Like I feel like I'm going to be talking quite a lot about that. And I guess also where interest rates are going. I feel like we see a lot of interest in that. And I think just people just want to know. And then the other thing, I think housing market. I think people want to know where the property market is going in 2026. Are prices going to come down? And quite a lot of things actually. But also just general, where shall I invest? People always want to know where the opportunities are going to be in the coming months and where they're not going to be. So I mentioned emerging markets earlier, and I say this having spoken to several experts, that emerging markets is going to be a lot more interesting in 2026.
And when you say experts, who do you talk to?
So I speak to people in the industry. So they could be fund managers and people that manage portfolios, analysis, etc. So yeah, I speak to so many people and we get a lot of information from people. And that's our job, to speak to people on a day-to-day basis and relay that information to our readers.
Thank you, Kalpana. I have 3 quick-fire questions for you.
Yeah, go for it.
What is the biggest lie we are told about investing?
It's gambling.
Which investing rule matters far less than people think?
It's the one where people think you need loads of money just to get started. You can do it with a small amount each month.
What is the one question every investor should ask before acting on a headline?
Does it matter? Because, and I just want to explain that actually, because you might read something and make a panic move. So you might think, Apple had a bad month. I'm going to go and sell all my stocks, holdings in Apple. That's just a panic, knee-jerk reaction. So ask yourself, does it really matter? It's just a bit of noise.
Thank you so much, Kalpana, for joining me today.
Thank you for having me.
Thank you for joining us today on The Wallet. You can watch the full episode on YouTube and Spotify, or subscribe to The Wallet on your favorite podcast platform. We also share short clips on socials at Vestpod, and you will find the key takeaways and resources from this episode at vestpod.com. Thank you for listening.